Good afternoon, respected members of the Institute of Chartered Accountants of India, esteemed Chairman of the committee, CA Madhukar Hirgange sir, distinguished speakers. On behalf of the Committee for Members in Practice, it's my privilege to welcome you all to today's highly relevant and forward-looking webinar on professional opportunities in virtual CFO services. The role of Chartered Accountant is undergoing a paradigm shift. The modern CFO is not longer limited to reporting and compliance, but has evolved into strategic advisor, growth partner, and financial uh, coincidence of the organization. A transformation that is most evident in the emerging virtual CFO model. Today's webinar aims to equip members with insights on creating scalable virtual CFO service models, automation while preserving human judgment, maintaining a fine balance between business growth and financial prudence. So it gives me a great pleasure to introduce our first eminent speaker, CA Shreyas Kumar. CA Shreyas Kumar is a seasoned finance and operations professional with over 25 years of experience spanning strategic finance, governance, business transformation, and leadership roles across diverse sectors and geographics. A chartered accountant by qualification, he also holds degrees in commerce and law, a master degree in business law and MBA, and specialized qualification in information system and management, reflecting a strong blend of financial, legal, and technological expertise. Currently pursuing a portfolio leadership career, he actively contributes as a strategic finance leader, digital transformation professional, and entrepreneur. He is also a regular speaker at a professional forums and actively engages in mentoring and knowledge sharing with the next generation of professionals. Beyond the professional sphere, he is an internationally recognized photographer and an accomplished athlete, symbolizing discipline, focus, and perseverance qualities that resonates strongly with the role of modern CFO. We look forward to his insights on building scalable technology-enabled virtual CFO practices while retaining the essence of human judgment. It's now I now invite CA Shreyas Kumar to kindly take over the session. Over to you, sir.
Thank you for the introduction. So I'll now share my screen as well. Please let me know once you can see it. You are able to see it, I guess. Right? Priyanshu, you can see my screen?
Yeah. We can see your screen.
Just to be sure. So yeah, this seems to be now of significant interest to see why virtual CFO services, what can we do there? I think the first topic that I would like to raise when we talk about virtual CFO services is that it's no longer new. It's already been happening for a while, and it's going to continue happening. But one probably very important point that I would like to draw your focus to, especially if you're all members from the practicing fraternity, is to think like a CFO and not like a CA here. Is there a difference? Yes, significant difference. I don't want you to think only from the audit point of view, only from compliance point of view, which is all your fortes. You need to start thinking from how will the management benefit from the insights that you can give them? Why is their cash flow so significant that unless they raise cash in the next 3 months, they're going to run out of cash and they have to shut their startup? These are insights that are going to become very valuable to the businesses that you're going to serve as virtual CFOs. So I think the first point I would like to make here is the mindset. It has to go out of the typical accounting, typical compliance, typical statutory requirement mindset to insights, to data analysis, to dashboards, to monthly meetings with the stakeholders of the company which are serving as a virtual CFO. Why will it continue growing is look at the startup boom, even in India, right? And look at the smaller startups that will scale up eventually. They all cannot afford a full-time CFO today. Even if they have finance professionals in their organization, they will still need a lot of guidance that are a lot more strategic in nature, and you being there as a, probably the guiding rails on the sides. So I think that is what is significant, and that is what is different than what you might be thinking as of now from the virtual CFO requirement. Gartner did this survey that I'm posting is about 8 years old, right? It said that finance functions must invest in automation and freeing up 30 to 40% leadership time for decision support and strategic advisory. This was probably 8 to 10 years back. It was probably meant for the CFO in-house. But I bring this to you as the CFO that might not be in-house, but as a CFO practice, as a virtual CFO. So focus for you is not to post entries. Focus for you is not to chase documents and say, okay, look, your voucher is missing, your invoice is missing. Focus is not there. Of course, those are a given. And it is not for you to just put the MIs together and give it to somebody else, but is to interpret it for them. And despite all this not being in your focus, your client should be so dependent on you that they will call you before they hire anybody, not only just finance professionals, because they know that you can add value. Before they raise funds, before they borrow funds, capital in whatever way raised, they will contact you. And before they think of expanding, before issuing new shares, before issuing new debentures, whatever is the case, they come to you because they know that you will solve this problem for them. So I think that is how you need to start looking at your role, not just as the gatekeeper for all the statutory and compliance posts. So this has already been there, and it can add significant value to your profession, to your practice, and it can be your forte where you give the strategy and the leadership. So, what do you think scalable virtual CFO services actually mean? And here we understand what is virtual CFO services, but we are trying to understand what is scalable here. So, what it is definitely not. Like I said, it is not bookkeeping plus review, right? It is not compliance plus MIS, and it is not just ad hoc giving certificates, just giving an advice, and it is not a one-on-one services where you're talking to all your clients and where your bandwidth is completely eaten up. What it is, I want scalability for all of us to be automated, where the operations, where a lot of accounting itself is automated, where the controls are standardized, where you don't need to sit and wonder if this transaction was correctly done, if it was correctly recorded or not, where a lot of automation takes over, right? If you have a purchase order and if you have an invoice accounted against that purchase order, so the purchase order already had for example, it already had the cost center, it already had who was responsible for that expense. It has to have the internal uh, referral points for you to see whether it can be accounted against that. And if this is already done, your controls are already in place, because when it is accounted against that, when there is an automation of that accounting, when payables are automatically accounted, these controls are already in place. You don't have to wonder, oh, did this get accounted right? Or did it exceed the PO value? Because you have automation that can ensure that the PO value is not exceeded. And where you come in is judgment for decision making and inputs and insights. So this is what needs to be your forte, and this needs to be what your focus is. So scalability comes from removing human effort from non-judgmental work. So where your inputs are not required, where your insights are not required, we should ensure that all these get automated. I think that is one of the biggest uh, focuses that you must have to ensure that your time is kept for what is most important, and that a lot of automation works for those that are not important and those that are standardized. So this is one focus I think you need to shift your virtual CFO services if you're already serving a lot of companies as their virtual CFOs. This is a very, very important shift that you need to do. And this is important because we all know that getting good people is tough. Getting good accounting knowledge, basic, accountants is also tough, because the time to train somebody and get them ready is significantly high already. And once they are trained, the next problem that happens is they leave and go, or they become unreasonable in their asks, in their requests. So, if you want to counter this, one of the important points is to rely on automation that takes away, but with a human in the loop, so that it is not completely automated. It is not going to take out the human beings, but it is going to help you scale the services. So I think that is one of the most important points that I would like to look at. I will now talk about a three-layer stack for the virtual CFO services that you can do. And I want it to be practical for you, not something that is theoretical that I'm showing a nice presentation and then, but you cannot actually implement it in your practice. I want it to be affordable. We are all growing. We are all helping our clients grow. And if you're servicing a lot of startups, they might or might not be well funded. So there also you have to be affordable, not just for your own sake, but also for your client's sake, and scalable. So I think we talk about three layers. One is an automated finance, which is going to be the backbone of this stack. If it is not, it is going to take a lot of your time and effort, and then the scale gets impacted significantly. We need to have a very well controlled workflow. So we need to know, for example, if a purchase order is prepared, can we automate the approvals? Can we ensure that nobody says, I did not know that this was issued, or that, this was beyond your approval limit. Why did you not bring it to me for approval? Because after your PO has gone to your vendor, after the vendor has already supplied, you cannot go and say, no, it was not approved by the right authority. This is the doctrine that you have to manage your house indoors, and you cannot expect your vendors to know it. So if you have workflows, for example, and if you have a lot of discipline, every chart of accounts that you prepare for your clients has to be very, very strict. You cannot have random, general ledgers created where, let's say, one expense, let's say telephone expense, exists as internet and telephone in another place, exists as something else. In similar names, you have 3, 4 ledgers. Of course, it is going to become very difficult for you to understand how much are you spending on telephone expenses. And imagine if you are an IT company with significantly high telephone expenses, but for whatever reason, you have 3 ledger accounts in that, and you only have been reporting to the management. You have left out one, and it's getting reported in other. So now the problem is, because of this, you will lose the confidence, or because of this, the right feedback will not go to the clients. So this is where you need to ensure that very high discipline is kept, even when you set up something as simple as chart of accounts, even when you're setting up the books of accounts. Have controls of how a new ledger is added, of how a new account is added, of whether you need so many bank accounts, whether can we minimize that. All of these has to be under high discipline, not for convenience. And then the third layer is where your input is very significant, and it's on an ongoing basis, because the first two is a high setup involvement. The third one is ongoing involvement, where you give the insights and where you give decision making support to the client. So in this kind of a scalable model, layer one is always automated completely. Layer two is also automated, but largely system driven, not where your energy and efforts are required day in and day out. And third layer is where insights become irreplaceable, and where your value is highly added to your clients. So let's deep dive a little into layer one, right? Automated finance backbone. And this is one of my favorite topics, because I run a company which does this. We try to create software for automation and which is agnostic. Now, how can we minimize errors? How can we minimize effort of your team, of your own self as well? Because let's say you have two staff for this client, somebody does not come. There is no backup. If you have to give the backup, you become the backup on yourself by yourself. So this is also something significantly important. And how do you ensure that compliance is never compromised? How do you ensure that all contracts that are required by your client is in one place, and their expiry deadlines, and when the client needs to go to his customer and renew the contract, and how the billing has to happen exactly according to that uh, contract, etc. So all this needs to be set up in a way that is automated. The data is captured automatically, and minimal human intervention. Human intervention, of course, will happen. 90% can still be automated, but the 10% human intervention will still be required because there will be exceptions to every business. We know how dynamic the businesses are, and there are going to be exceptions. But I would say give yourself a 6 month window or lower if your customer is pushing for it, or if it's traditional, maybe traditional businesses like, let's say, real estate, construction businesses is your client, it's going to take 1 year because people have to get used to the systems. Give yourself that automation window and start automating. Right? It should cover everything that you account. How to automate accounting. Can we have periodical invoices automated to the client's customer, so that we don't have to be involved? Can we have that automated, let's say IT services company, can we have that calculated based on the time sheets, time logs of the client staff, and then automatically sent to the customer? These are all possible. Invoice processing, this is what I said, accounts receivable invoice processing can be automated. Accounts payable invoice processing today is just getting better and better. For example, we have a system that uses 3 LLMs on an invoice. It has, let's say, 50 fields in the invoice because it has many line items. It uses 3 LLMs to check the exactness of the data that one has picked. One can hallucinate. Two or three to pick with the exact same error is very, very unlikely. Uh, See, at the end, what you need to understand that LLMs are probabilistic. They give you around 80 to 85% accuracy. But the same LLM, same document, the second time might give you slightly different result because it is probabilistic. That's how the nature of the beast is. How do you get rid of this hallucination, so-called, or how do you get rid of this error rate? By putting more LLMs on it, and three different LLMs getting it exactly with the same error might actually mean that if a human is involved, he will also exactly the same error. So that is where you have to pick and choose the right tool when you automate as well. Bank and payment gateway. Imagine an NBFC, right? A large NBFC which does about 5 crore transactions, small loans. They're giving out small loans to the uh, the lower underserved sector. 5 crore line items. And imagine the payment is coming through 20 different payment gateways. And this is across 5 bank accounts. Every payment gateway will send to X bank account or Y bank account, and they may serve multiple of this. The probability is 20, C5. The probability is very, very high. And in which case, let's say you have a tie up with Razorpay, that first 1 lakh transactions are going to be at 1%. The next 1 lakh transaction is going to be at 0.8%. You have to keep a track of this for your company across different bank accounts. Can you imagine the bank reconciliation nightmare this means? Can you imagine having people to do bank reconciliation statement? And now I'll tell you that this problem is not just for NBFCs. It is for e-commerce companies which have large transactions. It is for gaming companies. Though gaming has taken a hit, the non-money gaming is still there. And if these are your clients, and if they come to you saying, "Hey, handle my bank reconciliation statement between banks, between payment gateways, and between your books," this is going to be a nightmare because of the sheer volume. You need automation in these solutions. Imagine payroll across 10 legal entities, right? And everything is getting processed through you because they don't want to handle payroll, or they don't even have an HR department, and they already are 100 plus people because it's a startup that's growing very fast. Imagine these, and imagine using an Excel file. One error, one, and this I have experienced it myself. I have seen it from a very close quarter where one row of the amount was deleted by mistake. Everybody got a different salary that was not theirs. This became a big issue. And if it is underpaid, it is okay. If it is overpaid, how do you go and recover this? Right? So there are errors that can happen. Uh, for example, for your own firms, if you're under 10 people, a Zoho payroll gives it for free. Why not use systems? Why not get used to systems so that you can propose that to your client and then manage their services in systems itself, right? And standard MIS generation, whether it's dashboards, whether it is Zoho Analytics, consolidation, 10 different legal entities in 7 different countries. Consolidation, how do you consolidate? You download in Excel, you try to push it, the chart of accounts is not the same. There are no controls like the account codes, the GL account codes, there are no controls. Imagine the nightmare for you to do consolidation across these. But what if you have standardized this? And what if you have set up, for example, Zoho Analytics or Microsoft Power BI or something like this, where it automatically flows and it automatically gives you the time, instead of putting the financials together, gives you the time to analyze it and give insights, saying, look, you're running out of cash, you need to raise cash now. Or that your payroll is very, very high. It is 25%, while the industry standard is about 15%. You're 10% higher. Are you sure this is the way to do it? These are insights that your client will really, really appreciate. Then you come to the tools. Please get used to tools. I have come across a lot of good CAs who are very, very knowledgeable have set up Zoho books, but they have set up like it's like Tally. There are no cost centers and profit centers. There are no insights. Whatever existed in Tally, it has been just transferred to Zoho. What do you do if you just replicate one bad system to another bad system? The system does not become better itself unless it is set up in a better way. So let's say you have 100 GL accounts, you have to disable the 20 that you don't need and only use the 80 for the future. Of course, you cannot do what was already done in the past, but ensure that the right thing is done. For example, when we talk about, and this is something I recommend to all of you, is when you do systems installation, implementation for your clients, ensure that past data also is implemented. I tell you why this is very important. The entire organization growth, their trajectory, their comparison, it's always with the past data. And if they have to run to different systems for this, it is very inconvenient. Now imagine if payment vouchers, right? There are payment vouchers in Tally, there are payment vouchers in Zoho, in ERP Next, in Odoo. But in Tally, if you pass payment vouchers as journal entries, you cannot push it to another system like a payment voucher, right? Because it will go as a journal entry. Now you will not get these reports that you want, and rather data migration becomes a nightmare. So keep whatever tool you use. I'm not saying use this or use that, but I mean, my personal experience has been that Zoho is catching up in so many things, so many ways, very, very well, and I'm a big fan of it. But whatever you use, have the discipline to use it well. Have the discipline to set it up well first, and then use it well, and train. Please give a lot of importance to these two additional points. Create SOPs around whatever you set up and train the staff well, including when new staff comes in. It is going to make your life as the virtual CFO a lot better. Otherwise, you have to spend a lot of time in massaging the data, to cleaning it up and all that. So, which you can completely avoid. And then today, AI does a lot of automation. If you pick Perplexity, for example, Perplexity comes with Comet as a default browser. Now, if you log into your Microsoft account, I'm just giving you an example, with into Perplexity, it can create a reply to every email and store it as a draft. Do you know it can tell you which emails you have not responded to and which is pending response? And imagine it is like a personal assistant. It does all this itself. And also imagine, let's say you want a quick Excel setup for some complex automation, but it's an Excel setup. If you can describe it well enough, so this is where probably prompt writing becomes important. If you can describe this well enough, it can set up that Excel for you in an hour or lesser, right? So there is a lot of usage of AI. Even when you set up these things, please start using them. It doesn't matter if it goes wrong. Limit it to your own organization first, and then scale it to your clients. But there is so much scope to use this and so much scope to become better. So that's where I say, that if this layer, which is supposed to be automated, needs your daily attention, then your growth is going to remain significantly low. And you'll only be able to serve a few clients, because what has taken time is unfortunately what should not have taken so much time of yours. Let's talk about layer 2. And we are talking about paying attention to budget. I haven't come across a lot of practicing CAs who are giving CFO services focus on budget, on how the budget is set up and how it should actually be set up, and then monitor it versus the actuals. But that's what focus is still on, uh, how the actuals are being accounted. Cash flow forecasting, especially if you're in the startup sector, that's something that you just cannot miss. Working capital control. Today, all retail businesses are super high working capital, and they have significant cash burns, right? So working capital and cash flow go hand in hand. This is something that should become a basic service that you give when you service your clients, right? Approval workflows and policy enforcement. Please ensure all policies are set up well so that the management can focus only on the exception approvals. Otherwise, once it becomes overwhelming for the management, everybody is going to let things be. So that means when you come to when you are the virtual CFO, you have to handle too many exceptions. There is no rule only. Imagine 70% exceptions. This is going to become a nightmare for you. So you should ensure that the exception remains 10%, 20%. So the management knows the exceptions, and you know the exceptions already, which the management has approved. So approval workflows, you can use, for example, Zoho Creator within the Zoho environment, you can use for approvals. You can use Microsoft SharePoint, for example, for these workflows. There are simple tools, and these are simple. You should trust me that these are simple. You should get your hands dirty, give it a try. There is absolutely no harm. And you don't even need to go for formal trainings. You just need to just start trying. That's what I mean. So the first practical tool for this layer can be no code or low code automation. I'm not a big fan of low code, no code automation. I'll tell you why, but it's still practical in today's date. If you are on a system, let's say I am on Microsoft SharePoint, I have done a low code automation. I can drag and drop, I can click and select. All these are low code automations. But the moment I want to shift from Microsoft SharePoint to, let's say, Zoho Creator, I cannot copy the codes. I cannot copy the automation. I have to recreate the automation. This is one downside of using a lot of low code automation or no code automation. So that is where you have to be careful what you automate using code. And you can use this for simple workflows, for approvals, for let's say sending the PR for approval before the PO is approved, or for let's say there is your payroll calculation is happening, somebody has 10 loss of pays. It may be something that was already approved. You don't know that. So you might want to send things like this to somebody for approval, and this can be automated in the systems even with low code. And if you can bring this value, not the client, you, because the client probably has very low understanding of finance itself. When their finance understanding is quite low, how do you expect them to do better at finance automation? So this is where I think if your understanding of the systems is good, it serves a lot better. And robotic process automation, where can you use it? Data transfers, from one system to another. Let's say you have a CRM that is not connected to your accounting, and when you're creating a customer in the CRM, you want the same customer master to be created in accounting as well. Why would you want it to be done manually by your staff? This can be automated by a simple robotic process automation. Robotic process automation, in simple terms, is like a macro, is like recording a macro, but it is across multiple platforms. It is like it log into the CRM, it'll take all the data, it'll then log into your accounting software, and it will create the customer master exactly how you would have done it. So it is sort of a replica for you. And these are quick. These are a couple of days, a few days of effort, which you can use to significantly lower your workloads and automate your services. I think that is where you need to start using the low code automation, the robotic process automation, etc. Right? And then the third one will be the integration of different systems itself. So APIs or application program interfaces are something that almost all tool gives, barring a few. Like Tally does not have its own API. You have to create API if you want to automate, or you can use robotic process automation there. So the problem is, first you choose the right tool, which can be which can pull data and which can get integrated with the other systems you have. Like I told you, Zoho Analytics. Let's say you have an entity in Africa which is on Odoo. You have an entity in India which is on Tally. You have the third entity in the US which is on SAP. And you want to consolidate all these three entities. You can, Tally does not give an API, so you can do a download of data and upload it into your consolidation system. Let's say it is Zoho Analytics. Your Odoo gives APIs, your SAP gives APIs. So we consolidate and integrate all this as a system, and then we create the rule as to how your financials every month is ready and shared with the stakeholders. I think you have to use the data to build controls and issue warnings so that the exceptions are always clearly highlighted. And this is where your true value add begins, not in the simple accounting services. The layer three, this is the final layer when it comes to using your insight, and where, and this is what you should understand very, very clearly as to what somebody might expect, or even if they don't expect, because they have no idea what to expect when it comes to financial services, is what you can give. And this is the best value add that you can give, right? So decisions where should I do this or should I not do this? That is something that both needs to be evaluated financially, saying, okay, this is the revenue this will generate, this is the expenses, and you will have negative for the next 5 years. So it is probably not a good idea to start it now, at least, right? Growth versus cash. A lot of retail failures in the recent past has happened because they have grown too fast. They don't have funds. And if they have been unable to raise funds later, they will die. So these are also advices that you have to give, saying, look, while you want to grow, and while we understand quick growth is very important in today's market, but if you grow this way, this is probably something that will not help you. Funding, right? We hear, oh, I want to raise equity because I don't have money to service debt. But how many people tell them that debt is cheaper than equity? Because if I as an investor, I know that my mutual fund portfolio is giving 15%, my startup investment is giving 20%. So if I come to you for investment, I will expect better returns. Equity is more expensive than debt or any other form. So you should give them the right feedback, saying, look, if you take a debt, you don't have funds, or you currently don't have the revenue visibility to service it. Or if you take equity, you should say, look, you're not in the space. You are in the space of high volume grocery trading, right? And these are also automated these days as a retail company. High volume trading in groceries will give you 3 to 5%, of course, on 3,000, 4,000 crores. But the margin is going to be 3 to 5%. How will you service that 7% or 10% debt? These kind of feedback must go from you on what are the governance. Look at DPDPA coming in and look at it probably causing a big disruption in a lot of your clients because they are handling personal data. Now, can you advise them on these topics, right? And please ensure you also advise them on the right tools. When they are trying to implement tools, you have to be that advising partner, or even the implementation partner, if you pick that up, right? That tells them what to implement. Use the dashboards to show them, look, this is what you need to look at every month. This is what is readily available for you every day. I've seen companies, large companies, 500 crore, 1,000 crore companies, sending daily reports on WhatsApp because the management team exists on WhatsApp. Why should that happen? If Power BI is a mobile app, and if Power BI is integrated with the financials, that should be an app that they open every day in the morning to see. The sales team sees what is the receivables that they have to go and collect, what is overdue, and what is overdue over 90 days, that is, something that is on high focus for them. These are reports that need to go out on analytics platforms, on dashboards, not on WhatsApp messages, right? And creation of narratives for the finance. See, every finance team I know, especially all the multinationals and the large organizations, have a monthly review, right, with the board or with the management team. Now, in these reviews, your role should not end up being the somebody who just puts the numbers together, but also gives the narratives, understands why there could be this difference and how you can help it improve, right? So here, what is happening is you're interpreting what is happening in the business. You're helping them understand their business better. You're not just focused on reporting. You're advising the companies on what to do right, and not just focused on compliance, saying, okay, you filed your GST return this month and that is a tick. No, that's not just it. You're even giving them insights on saying, look, your uh, unclaimed input credits are significantly higher. So do you want to think of something else? Or let's say you have export of services, then what do you want to think of? So there are a lot of advice that you can create, that where you can create value for your clients, right? And this builds accountability. If the sales staff gets overdue reports every day, and also the top three accounts they need to focus on every day, on a dashboard, they are going to focus on that, and the collections are going to become better. And you can say, I have helped the client reduce his overdues from 15% to 8%. That is a real value add that a lot of businesses will give the top buck for. So add value. So technology, of course, can give any answers that you want for, but you have to keep the judgment with yourself and also carry responsibility for all those judgments. So please apply your judgment, know what context it is to be applied in, and also use your prudence in understanding where automation starts and where it stops, and what is the right automation for this specific thing. Well, I think we'll leave some time for questions. I'm sure there'll be a lot of questions as well that we have. Layer one has to be automated for it to be scalable. Layer two has to be system driven as well. And layer three, where your inputs are significant. I think what we should not do is spend a lot of time of your time on layer one and layer two. Spend most of your time on layer three, and this is where your scale comes from. This is where the automation is used uh, most, efficiently and effectively. Please ensure that you focus on that. Of course, there are a lot of tools that you can use, a lot of solutions that you can look. You just have to be curious enough to start looking for it. And so I thank you. I thank the ICI for the opportunity to address all of you, and I hope this has been a value add and we can have a few minutes of interactions with all of you.
Yes, sir. So we have some questions in Indian business environment, particularly for startups and investor fund companies with high cash burn. How can a virtual CFO balance rapid growth expectations with financial discipline, cash flow control, and statutory compliance?
Right. So, tough questions. Are you the business owner? No, you're not. Are you a stakeholder in the sense that you're going to get significantly impacted? To the extent of your services, yes, but it is not your business. I think you should allow people to run their businesses. But what is your role, very, very specifically and focusedly, is telling them what will happen if they do this, or what will not happen if they do that. So this is something where your value add comes, and this is where is that the third layer of human judgment comes, where you tell them, look, you're growing at 10%, your cash burn is at 20%. So if you raise this equity, this is not going to help you. You will not have a runway, right? This is typical startup lingo. Your runway is 3 months, and you have to go back to the market looking for funds again in 3 months, which is very, very impractical. So you have to tell them, look, this growth maybe in 6 months after you have standardized or stabilized your products, you can look at this. So something like that might be very, very interesting. So your input comes from a very neutral point of view as not as a stakeholder, not as somebody who is going to make the judgment. After this, what decision is taken by the management of the company, of your client, of the startup, and of all the investors who are already probably sitting on their board of directors make. So if they still decide to take that plunge, maybe it works. Look at so many big companies where it is, which has scaled. Look at something like a Zepto in 3.5 years or 4 years becoming $7.5 billion of valuation, right? These are big examples. If we as traditional accountants gave feedback saying, look, you can't scale so much so quickly, probably that would have never become a reality. So we need to also understand that the creators of this business know better, but give our insights, give them the guardrails saying, okay, look, we see this risk. Please keep this in mind.
Okay, sir. The next one is, how should virtual CFO in India design their fee models and service structures to ensure commercial sustainability while delivering high value strategic advisory services to varied clients such as SMEs, startups, and family managed business?
Right. I think that the last one is also becoming an important part of our uh, going by the number of exits that startup founders get. Let's say somebody sitting on 500 crores and he would want to invest in so many other investments. Family offices has of late been gaining a lot of importance, and I'm coming across a lot of good practices managing these family offices. So I think that's a good focus field. I understand how to design your services. One, you should know what are if you're let's say starting off with a startup and they don't have a system, you should already know what system you will implement. You should already know what you will automate, and you should already tell them, look, this is the value add I bring. This is the system I will give you. This is the automation I will give you. And these are the insights I'll give you every month, every week, whatever is the duration you agree upon. When you give them this clarity, then you can charge. Otherwise, you're just another cog in the wheel. You're just another service provider who does not add value and can be replaced very easily. When your services have significant value add like this, I think then you become irreplaceable to the business, and you become a very confident partner of that business. So I think that's how you need to design your services.
Okay. The next one is, looking ahead over the next 3 to 5 years. How do you see the role of virtual CFO in India evolving with the increasing use of automation, AI, and real-time financial and business analytics?
Right. One is finance is not everybody's forte, right? If you're talking about startups and if you're looking at virtual CFO services for startups and SMEs, finance is not everybody's forte. So they don't know whether to pick Udo or to pick Tally or to pick Zoho or what to pick. That advice also has to come from you. So when you yourself become the advisor of what right tool to pick, when you yourself are an advocate of the automation that ensures that you use the right solution, right technology to automate that services, and where you only interpret the data that's coming in from there and add value to the business, you no longer become the replaceable accountant that is going to give his services. I think that's the biggest difference that you can make. And you should yourself be a very big advocate, and please experiment it on in your own practice. That's the easiest way of trying out, because you know your practice better than anybody else, and you know what you can try, what will work. Look at a CRM. How many of us use CRM? ICIA has a subscription to Zoho for members, but it does not have CRM. It has something called as Zoho Practice. Why a CRM? If you're looking to track clients, track new clients, if you have had some discussions, if you have had to give some reports, to track where it is, when it is due, all this becomes so important. These are disciplines that you need to build, that no longer can be based on your memory. If you only have 10 customers, that is memory. Okay, it works. But the moment you want 100 customers, 1,000 customers, then that does not is not practical. So I think that is where you need to choose and pick what you want to offer. And if you want to offer just the traditional services, it is going to become more and more difficult to sustain. But I think, like the businesses themselves have been growing and understanding technology, you also have to start doing exactly the same thing. And your services will remain as invaluable as it always was.
All right. While providing virtual CFO services in technology enabled and remote working environment, what are the key risks such as regulatory statutory compliance, data confidentiality, and information security, and fiduciary and professional responsibilities that chartered accountants must proactively identify and manage.
Right. I think very important question, especially I know that there is significant growth in your shared services. I don't know how you want to call it, GCCs, you want to call it outsourced accounting, whatever you want to call it. These are services, for example, from Australia, from US, from other parts of the world. This is growing. You need to understand their law. And trust me, if you have passed CA with very, very complex Indian laws, their laws are a lot more similar, and you will be way, way more, well versed with their law if you just put in a small effort into it, because they are a lot more similar, lot more rule based, and very easily you can follow them and understand them. So, given this, I think you have to, if you want to service, let's say, to become a to have UK clients here, and you have to understand what is the different laws that will impact when you're doing accounting, what accounting standards are applicable. You have to understand that. And to that extent, it is required that if you start servicing, even if you're servicing out of client, out of state clients from a remote location, it is required for you to understand, let's say, the labor laws of that state, because a lot of labor laws are under the state. Whatever else is the local rule of that state, you have to understand that. Otherwise, it becomes an issue. But one important thing when you give remote services, you have to have that personal touch with the client, whether it is regular meetings, even if it is a virtual meeting, the regular meetings. If you lose that personal touch, you are replaceable by anybody who can give that additional feel. Humans still love that personal touch, and that was very evident post COVID when people wanted to start going and meeting people again, right? So that is a very important thing that you will need. That remote services, though it serves 100%, I think it still remains a problem where you lose the personal touch. Uh, Probably that's what you can do for remote services.
In practice, many organizations either lack clarity, defined processes, or are resistant to accept gaps in their existing system. Since effective automation and SOP implementation require strong underlying processes and management support, how can a virtual CFO influence and charge the client's mindset? Change the client's mindset to recognize these gaps and drive acceptance of process standardization and automation.
Everything should add value to the client for him to do something differently, because today something is working, and something is working well for them. It is not an issue. But look, you cannot wait for a fraud to happen before you go and tell the client that, look, okay, fraud has happened, now what do we do? So you have to draw attention of the client. And if you automate systems, right, you get that time to sit and but I think before you start anything with the client, you need to first understand their systems. You need to onboard the CFO there, onboard the finance members there, onboard the CEO or the board there, to let them understand that though this is running well now because it is small, the moment it scales, there are these risks, whether it is of fraud, whether it is of non-compliance, and so on. So you need to bring these value adds to the table. You need to help them in putting the right process in place. I know the client might not have a good process, but you need to create that document even if you don't charge for it, because it makes the next 3 years or 5 years of whatever, however long you can retain that client, it makes your job so much more easier. Think long term. Don't think that I will not put in 3 days of effort, because you might have 100 clients, all of for whom, for example, have expense employees expense accounting, and all of them who have SOPs. If you have one of the SOPs which you created for another client, you will need to adapt it for another client and give it to him. So you already have a lot of data, you already have a lot of info. If you can add this value to the client, please treat it as an investment to set their processes right, because it makes your life a lot more easier, and you can add value to it. I think it is a conversation you should not skip with the management of your clients, and you should draw attention to the risks that are there. When they understand the risks, today they're all directors. When you show them, look, this director was arrested right, because this did not happen. Or this director was arrested because some PF law was not well managed. It could be something as simple as this. And when you draw their attention to this, of course, it is sort of fear mongering, but that is also your job to show the risk to the client and then say, look, this is a risk. Can we help you overcome this risk and set up a better process?
Just one last we can take, and then afterwards we'll take it in the end. Should chartered accountants prioritize learning coding, uh, languages like Python, or it is more strategic to master no code platforms and outsource complex development?
Oh, it's a simple question for all of you. If somebody is a tax practitioner, do you have to learn all the accounting standards? Uh, yes. Do you need to know it? No, just enough to ensure that you know what accounting standard becomes applicable when you're handling GST, for example. So, do I code? I code. I learned coding when I was with G when Oracle implementation went for a toss, and we were 70 of us doing accounting in Excel. Imagine a 700 crore company in 2004, which is doing accounting in Excel. It was a nightmare, and Excel used to crash with the kind of data we were handling. So we found recording macros as the first solution. Then we found macro recording has very limited solutions. Then we tried to get into the macros and tried to learn coding. That was Visual Basic. Now Python is a lot more easier. It has lesser syntax. It has more English. But take a step further. Even your people who create very very complex code don't code so much these days. They only try to debug it, try to understand where things are going wrong when something is automatically coded. So, can you use AI for coding and building simple automations? Yes, you can, and you should. It is very simple English these days, including Python. Of course, there are some syntaxes you might want to learn. But more importantly, if you don't want to do that, you have to pick up the skill of prompt writing. The better the prompt, the better the solution from the prompt writing. It has to be significant. You have to keep DPDPA in mind, keep European GDPR in mind because your client is from European origin, or keep the US laws in mind. So you have to put the parameters, the guardrails, etc. When you create the prompt, your prompt has to be very, very comprehensive to ensure there is no hallucination, to ensure it does not create case laws. It happened in high courts, it happened in ITAT, that case laws were created by AI. And because the question would have been, what is a case law? Can you give me a case law for this kind of a situation? It would have created the case law because it does not understand that what you need to do. You can, in fact, when you set up your account in whichever AI tool you use, you can say, I don't want something that is non-verifiable from a given from let's say the 10 sources of case laws that you generally use when you use it personally, when you search personally. So you can say these are the 10 websites I use. If a case law is not listed in this, I don't want you to state it. So prompt writing probably the first priority for everybody to know. The second priority, if you can understand code of how it flows, how the logic flows, you will understand a lot more of systems. You will understand how to automate, how to challenge when people say this cannot be automated, and probably turn out a much better automated system for your entire client network.
Okay. So, Madhukar sir, if you want to add something, or shall we continue?
No, I think we can continue.
Okay, sir.
Only thing, no, I think we can continue because
Okay.
I have a bigger question and
Okay.
I would like to listen to Srikanth also.
Okay, sir.
90% I have listened to Shreyas, 10% I missed, but
Okay.
I would like to listen to Srikanth. And
Okay.
questions are all taken.
There are 3 to 4 questions as we have less time, so we can take
Okay,
it afterwards. Yes.
perfect.
So,
No, you should complete in time also as
yes.
we start in time.
Yes. Thank you, Shreyas sir, for those valuable insights in scalability, automation, and the irrepressible role of professional judgment. We now move on to the second technical session, which focus on critical responsibility of every CFO. balancing business aspirations and financial discipline and prudence. So it's my pleasure to introduce our second eminent speaker, CA Shrikant Ravindranathji. CA Shrikant Ravindranathji is highly accomplished finance professional with over 25 years of experience, including extensive global exposure across multiple industries and organizational environments. A chartered accountant and a cost and management accountant, he has held senior finance leadership roles, served as CFO in funded enterprises, and has been closely involved with the startup ecosystem in capacities such as strategic advisor, finance leader, and angel investor. He's also a founder and entrepreneur, having built and scaled professional services and talent oriented organizations, and brings deep insights into financial governance, risk management, and sustainable growth strategies. His perspective on aligning business needs and financial prudence is especially relevant for members aspiring to provide virtual CFO services to dynamic and fast-growing organization. I now invite C.S. Srikanth, sir, to kindly address the participants. Over to you, sir.
Thank you so much, Priyanshu, for this wonderful introduction. At the outset, I would like to thank the Institute for this opportunity to interact with fellow professionals. And in particular, thanks to Madhukar Hiregange, sir, for the opportunity. I know we kind of went back 6 months ago discussing about how some of us in the CFO services world can actually contribute to the larger CA fraternity of folks who are actually intending to come onto this side of platform, how our experiences could help shape, influence some of the thoughts which are probably ongoing already in the fraternity, right? With that, I would like to share my screen. Kindly let me know once you are able to see it.
We can see, sir.
Wonderful. Well, the topic I have chosen to present today is under the larger aegis of professional opportunities in the virtual CFO world. From a more scalability perspective, the topic I've chosen to present is the balance between business needs and financial prudence. At a larger context setting, I could probably even call it as a comparison between business acumen and finance acumen. Given the fact that most of us, I would say all of us in the CF fraternity have a reasonable sense of finance acumen, for the fact that we have probably qualified, completed one of the toughest exams in the world with so less a pass percentage, the real need to probably sometime ask ourselves is that good enough? Or in the world of services business, what we are kind of trying to build, given the fact that it is a virtual CFO service, do we also need to look at other skills as well, right? With that, with the background of what my dear friend Shreyas just now gave about AI, I did a small experiment, which I would like to kind of share with you guys. One moment. Yeah. I went to Google today earlier and I asked Google, hey, you know what? This is typically a favorite topic for many of the finance folks, that we all believe our friends in the non-finance world, right? Those guys in the sales, marketing, HR, and so on and so forth, they need to know about finance, because we have done so much of hard work learning about finance. We also want them to be a little more, I would say, oriented to finance so that our interactions become easy. With that in mind, I asked Google, and now Google has an AI. It gave me an AI overview, asking them how many books are out there which talk about finance for non-finance people. My intent was to just probably get a number, and it actually shocked me by giving me this answer. It says there are not a single or a total number. Google couldn't give actually a count. It says there are thousands of books out there which actually talk about finance for non-finance people. That actually made me very happy for a moment, wherein I said, wow, it's not just me. A lot of others actually are also thinking in the direction that we should actually educate people about finance, and those guys who are non-finance, right? Now, let's flip the coin. Let's get to the other side of the table. I went back and I just changed few words in my inquiry, and I asked Google the next question. I asked Google, tell me how many books are there which are non-finance for finance people, finance managers. And you can see the answer it gave. And that's the world of AI with a word of caution. It actually copy pasted the same answer it gave last time to me, thinking I'm actually asking the same question what I asked earlier. So it looks like there are hardly any content out there which can actually teach non-finance world to the finance folks. Now that's a interesting insight and coming straight from Google, something which I wanted to share with all of you. With that, I quickly wanted to move to a couple of data points which I gathered recently, right? This talks about the world of CFOs generally. And this is taken from a survey done not too far in time. It talks about few insights about CFOs and all of that. In the world of CAs, we typically either have folks working in the industry, going all the way up to becoming CFOs, and of course, some of us in the consulting and practice space, right? With that in mind, I ran this data to understand. This data apparently is from a survey done by a reputed organization. This is for the top 100 CFOs in India. Now, what is top 100 CFOs? This is typically top 100 CFOs as represented by maybe close to $1 trillion in market cap, close to, I would say, a 50% of GDP share in terms of the revenue of these companies. And I think more than $200 to $300 billion in brand valuation. Now, these are folks managing such a large composite value of the world of listed companies, right? They're a fraction of that, right? When I started looking at this data, what I got, it was actually rather fascinating that a significant number of these companies, the CFO is a CA. As you can see out there, close to 65% are just a CA. They don't need any more qualification. Another 10% did beyond CA, they went on to do an MBA as well. And the rest, around 25 plus percentage of CFOs seem to have other degrees, not relevant from our conversation, right? So close to 75% of your top 100 company CFOs are a CA. At the same time, something which I've kind of put as a note there, footnote, the act, the governance, which actually is taking care of all the companies in India, which is the Companies Act, it actually doesn't really mandate any professional qualification per se to become a CFO. Now, that's an interesting insight to look at from a CA world, which we are. That's something to take pride of. Then I kind of looked into another interesting data point, which is the same set of top 100 CFOs. What is their typical experience set? What's their skill set? Now, something to really admire about is a significant, almost close to 2/3 of the CFOs actually have a very strong controllership and compliance background. As you can see, this is the data coming from Russell Reynolds, and they did a survey in December of 24. As I mentioned, just not too far off from the time we are speaking. And a very interesting element is around 30 to 40% had other skill sets. There were people even in the consulting background, core areas of treasury, that could kind of relate to maybe a financial services, a banking sector as CFOs. But very interestingly, just around 15% people had business finance as background, right? I'm just adding the larger context to the story I'm building today to talk about what we, as folks aspiring to actually become virtual CFOs and help companies, need to have, apart from what is our, I would say, core aptitude, our skill, which is finance. Out here, out of 100 CFOs, just around 17 people actually had a very strong business finance background, right? With that, one interesting insight about what happens to the CFO churn as well. CFOs become CFOs that they become. What do they do after that role that they have to move on to do something else? Now, they did a data gathering of just around 20 odd CFOs. And this is the most interesting data they got, that hardly 1/5 of those CFOs actually became a full-fledged CEO. Now, that's hardly 5% of the folks from the finance world actually going on to literally rule the entire business world. Now, this is the world of the CAs in the corporate side. Now, let's look at the interesting data point that we have from the institute side, right? This is something which is again a published data I got from the data available in the domain, public domain. This is about the landscape of CA firms in India, right? There are around 1 lakh or more registered CA firms in this country, employing close to around 2 lakh CA professionals. And out of that, I just gathered 2 specific data points to talk about that how dispersed the professional environment and the landscape is, that just around 2% of these registered firms, around 2,000 odd firms, are actually of people who are 6 or more partners. And they kind of employ around 40% of the professionals, right? On the other end of the spectrum, the sole proprietor firms, which is the individual CA, who incidentally, the context of this conversation is also aiming to be a virtual CFO, right? They kind of make up for around close to 70+% of the registered the firms, and they deploy they take care of, absorb close to around 40% of the workforce. Now you see a different world of CAs as to what's happening in the industry sphere and what's happening in the landscape of the institutes data around the registered CA firms, right? With that, I was just trying to see where are we going. We are actually moving from a CA to potentially someone becoming CFO and to someone becoming CEO, right? All these are professional roles. At the same time, I was kind of thinking through, having interacted with many of my friends across the spectrum of CFOs, CEOs, including folks in the practice world, that I came up with this. It's actually a CA to becoming a CFO and who professionally becoming a CEO. A lot of them are actually becoming entrepreneurs. Now, in the world of a CA practitioner, it's actually a straight jump that you're actually from CA, you're actually becoming an entrepreneur, right? It's a proven fact that the role of CFO is naturally the stronghold of CAs. We own that space, as we saw in some of the data points. Many of us are actually becoming capitalist in terms of having to be on the institutional investor side, becoming board members, and so on and so forth. Of course, entering the complex area of CEO, having to run the overall enterprise. But the fact remains, becoming entrepreneur is also it's a moment, right? It's typically India's moment of having an entrepreneur in every specific area. And the best part is all of it is actually within this room, that many of us are actually entrepreneurs because every practicing CA is already there. as an entrepreneur, right? With these comments made, I would like to quickly move and talk about what is this journey. This is typically the Hanuman leap, right? That on one side, you have a professional qualification with you. You have the finance acumen. From there, you're actually leaping and going to be an entrepreneur eventually and start advising people as to how they should run their enterprise as well. Now, between these two is the two pillars of the finance acumen, which naturally most of us have a plenty, to gathering the business acumen, which will make a significant difference in how we actually consult in the world of virtual CFO, right? So let me talk a bit more about what is actually finance acumen. Finance acumen, at the outset, it typically could be focusing on what we are taught during our educational journey: accounting, reporting, control, compliance, audit. I think this is bread and butter. All of us have kind of reasonably gone through the rigor. It is also significantly backward looking for the fact that it is also gathering data from the past, reporting to, let us say, the management, reporting to authorities, reviewing. Also, slightly control oriented, because I still remember the days when I used to be CFO in organizations which were funded from the PE fund. The PE fund's CFO used to talk to me and say, "Hey, Srikanth, you know what? Finance role is negative role. You have to have a control-oriented personality. The fund has actually put money in this company in which you are the CFO. You need to take care, have a great sense of control, ensure the money is spent properly, ensure everything is working, and there is a larger sense of governance." And that's actually, I see in this very slide, kind of going back few years ago when I was a CFO, that this is exactly what we are taught from a finance acumen, right? And of course, there is a larger sense of governance which is required, be it regulatory or be it an internal control mechanism. We are kind of focusing on the finance acumen side. But there is a different world, which is the business acumen. Now, the world of business acumen, as you can see on screen, it's beyond the technicalities of finance. It's about running the very business. Now, again, in the context of being a virtual CFO, you're actually balancing both. That on one side, you are running your own enterprise, you are a businessman of your own, and at the same time, you are actually advising organizations who are having founders, investors, and a board who is looking to you for not only a classic technical finance advisory, but also if you can come with a sense of business acumen, it can make a world of difference. Now, what is business acumen at large? It's typically about understanding the larger business model, understanding how the industry works, understanding the perspective from the point of view of competition as well as customer. Having to go beyond a little bit of our world of finance to see, hey, how this very business works. In fact, Shreyas gave a good example of a e-commerce company wherein if that were to be told that you should actually not do certain things, not take certain risks, that probably wouldn't have become a unicorn, right? We are seeing a slew of unicorns happening, a lot of listing of companies happening. These are all actually startups way back then, and they have typically gone through the journey. And the finance folks there, I in fact have friends who are CFOs of some of these listed companies. Their world has changed significantly. Their world has kind of transformed from the point of view of not just being a guy with a pure finance acumen looking at a controllership viewpoint to being a business partner. From a person who is actually looking at more of backdated data point to more of front loading and looking at things which are more forward looking, which helps to enable the decision making process, right? So as we kind of look at it, it is not just the data, which is what is expected in this world of consulting. It's also the insight that you bring in, which can actually help the stakeholders take a decision. Now let's look at some of the attributes of business acumen, right? So who can kind of, what's typically is your role as a person who is shifting with the core strength of finance acumen to play a role of a business partnering a person. So there could be situations where it will actually need you to take decisions, right? Typically, historically, in the world of finance, we have said that business decisions are actually made by the business folks. For example, a sales guy has to take a decision on discounting. A marketing guy has to take a decision on a marketing campaign. A CEO has to take a decision on maybe to buy or sell a unit or to go for an extra funding or not. But you know what? Once finance actually becomes a co-jointed partner in this entire decision making, you start actually being an influencer of sorts in enabling many of those decisions, right? Let's talk about the industry and business model relevance, for example. This is typically that if you're actually having two different examples to talk about, if you're actually from a financial services banking type of industry, you tend to have a very acute industry expertise, which actually becomes helpful. But it's also seen that many CFOs also have a cross industry experience and expertise, which actually helps in many of the model building in terms of how the scenarios could happen in future, right? That is a significant contribution which a finance person can render, which is close to being a business person, right? While risk is our favorite word in the world of finance, because we are the guardian of the risk element, we need to let people know if there are any things which is in the nature of even right down to a contingent nature, we talk about it, or things wherein which are kind of gone wrong from the view of law, we need to make it good, pay a fine, or ensure that we are not paying fine. But beyond that, the element of risk has to go beyond the compliance side of the risk to call out potential risks from a futuristic point of view. When you start building scenarios and business models, I've had, for example, instances wherein I was a CFO in a company during COVID time. I was actually a consulting CFO. Believe me, the number of annual operating plans we created, we actually forgot the versions which got created. We had to build scenarios which would probably run up to 10 different scenarios as to what if a set of assumptions were to hold good and not hold good. Now, for that, the hat what you would have to wear is not just a classic compliance-driven personality, but go beyond it. Look at it from the point of view of an enabler, an influencer who can also largely manage the element of risk. Once you start doing, I think your role actually shifts to more of a strategic business partner. Believe me, I have had these instances during my CFO journey that at a point of time, the CEO wouldn't actually take any decision without actually consulting the CFO. Now you're almost becoming a giant decision maker as to what if scenario. If I were to take this decision, what could potentially be the impact? Now connecting these dots to the virtual CFO scenario, which we are kind of having as a context conversation here, is while the expectation of the virtual CFO would be to that of manage the entire finance function, take care of maybe few folks who are running finance, bring in an element of accounting overview, compliance overview, set up a process, which is kind of tends to be manage the current situation and probably manage what probably were to be a little reasonably historic. But believe me, as the company progresses, as the company starts becoming bigger, scaling, many of these elements of business acumen become very important and come to the forefront, and it becomes demanding. Let's talk about some of the key aspects of business acumen, right? If you look at it, when you operate in a typical silo of finance, that I'm the finance expert and I take all the finance decision. That's perfect. Once you start looking at it from a stakeholder point of view, you start actually talking to multiple stakeholders. You start talking to a salesperson, you start talking to your marketing head, you start talking to the IT head, the HR person. The multi cross-functional perspective becomes a lot more important, right? A market and customer orientation becomes very critical. Needing to understand if, for example, a company has a certain offering in terms of a product or a service, how is that actually performing at this point of time to kind of how that adds up to a certain P&L or a balance sheet for a certain period, which is reasonably historic, to start looking at a forward-looking statement. And you honestly cannot make any sort of forward-looking statement without a reasonable market, a customer orientation to understand what really is happening there. Right? Eventually, this will all add up and starts becoming sort of a leadership intervention of sorts, wherein people will start looking to finance for not just finance insights, but also maybe the gut feel which a finance person can actually bring to the table in terms of larger decision making. Hey, you know what? Given the insights you have from a historical reading of data about how this product has performed, do you think we could do well? Or what kind of investments we could actually make in a capex scenario for a particular product line to kind of scale up? What's the technological transformation that's happening, especially in the world of EV? Have a friend who is a CFO of a listed EV company. And the kind of conversation we were having recently, it's not just about anything in finance. He was like a guy who almost ran the engineering department in that company. He was talking about mind-blowing tech, which is probably happening in the EV space. He was telling that we actually don't actually sell a EV vehicle anymore. We're actually layering software on top of it. I'm actually a semi-software company. Now that kind of opens up different kind of a complex things are associated with it in terms of your own internal revenue recognition and all of that. But beyond that, you cannot bring your perspective to the table unless you're really connected beyond the four, I would say, walls of finance. You have to go and have a connect with right down to maybe an engineering department to understand what's the tech they're working on, work with the strategy department, understanding what's the competitive scenario. All of that, which is a cohesive piece of understanding, thinking, and eventually providing your judgment becomes the most critical aspect of business acumen. Now, how do we improve business acumen? I have been a finance guy for too long, and suddenly you ask me to bring business knowledge to it. And how can I do that? That could happen potentially through some of the levers. I've just tried to identify some and provided a viewpoint here. One is about typically a case study approach. You could look at interesting case studies and start understanding, developing a perspective about how things pan out, right? Internally, the particular word rotation I've kind of highlighted because it may not happen in a practice world. It happens in the industry world that look for rotations. I've particularly had an instance wherein in the past, I was in a rotation program in one of the companies wherein I could actually do 3 different roles across 3 different years, which actually opened up quite a bit of an understanding and helped me to understand different elements of sales and marketing, where I was working very closely with those team members. You could be part of any of the simulation. I was just mentioning a while ago about a simulation around the annual operating plan building, wherein if you are able to kind of come up with, let's say, 3 or 4 varieties of annual plan, that will enable broadly to understand how it works, right? And mentorship is also a wonderful area to look at. You could be a mentor, you could be a mentee in terms of knowledge sharing. You could be a mentor to a cross-functional person from a non-finance department, talk about how finance function works. I have had a client, a top-tier IT company, wherein every year they actually rotate finance folks outside of finance. So we have had folks actually moving into procurement, and folks from another division coming into finance, wherein they develop cross-functional skills and also enable finance as a function to have a better relationship with other functions, right? You could also look at networking. Networking, to be very honest with you, is a very, very powerful uh, tool, which I feel it is heavily underutilized in the Indian context. I'm typically a visitor to a CFO, let's say, seminars and groups, where I typically, the pattern we see is, as the CFOs start growing within the organization, they start attending some of these sessions. They understand the use case of having to be part of any network. At a very young stage, or even from the point of view of a professional who is planning for uh, a service of the nature of virtual CFO, networking is paramount. Networking among peer groups, networking outside of peer group, understanding different facets of, let's say, what, for example, Shreyas just spoke about, what's happening in the world of AI, to probably just go attend one of the AI sessions to understand what's happening, go meet some of the folks in the tech world to get a perspective. Networking is absolute essential in the world of the current consulting world, and it's a very critical aspect of how do you develop the business acumen. The last thing is to be involved in projects. Now, projects is a wonderful way. It's actually slightly risk-free way of having to develop the business acumen. Uh, in every organization, they are running semi-projects. They're trying to understand how probably a new market entry can be made, a new product line can be launched. So each of these examples becomes a wonderful opportunity for finance folks to be party to it, and actually contribute not just the finance side of it, from a overall overarching business point of view. Many years ago, I was actually in one of the organizations, part of a finance rotation program, wherein I could actually go ahead and take the name of the company, Dell. Dell apparently launched mobile phones in India around 10 years ago. I was part of a project wherein we actually went in and analyzed to see what's the mobile phone market in India like, and what type of technologies are there, what's the landscape around distribution, product, the post-sale service scenario, what are the type of price points you could do. In a matter of 6 months, we actually could launch our own branded phones in India, right? But having to be part of a project like that was absolutely eye-opener, because the kind of challenges it throws, the risk it throws, and the decision making, I think the push it kind of lets you to, within 24 hours you have to come back with scenarios, you have to start taking decisions. That will honestly open up different facets of an individual's thinking ability, wherein at the core, I repeat, we are all core finance function experts. We know our numbers, we know our rules of governance, we know our bean counter duty. But if you actually start doing all of this, you are ready for a bigger world of consulting, and that's what it is. With that, a small quote, that is, finance acumen, as you can see, ensures we understand the numbers part, whereas the business acumen ensures that we understand the business behind the numbers. Thank you. Thanks for the opportunity to be part of this session and to share my thoughts on the element of business acumen. Happy to take any questions as such.
Thank you, sir, for your wonderful presentation and the session. So I would like to, there is some question also, which we would be taking yes or no from the members, whether they are interested in enrolling for the, or they want to have a full-fledged training program for becoming a virtual CFO. We'll put that question shortly. So in the meanwhile, I would be taking some questions, and you can answer those. So there is a question. We currently handle traditional accounting and compliance work. Virtual CFO services, however, require strong technical and strategic expertise. How can traditional chartered accountants begin the virtual CFO journey as a beginner? What is the monthly recurring fees fee can start in an Indian market?
Okay, that's a wonderful question. That's, I would say, very insightful for the fact that you already have a finance acumen, for the fact that you are a chartered accountant, you're practicing, you already have the strength of having to know your own world of audit and accounting. The leap what you need to take is having to be a CFO, right? In the world of CFO services, we are typically seeing a pattern that there are typically two patterns of CFO service. There is one set of people who are actually ex-CFOs. These guys who actually made it big, they're been there on companies listed or otherwise, they come on to the platform of CFO service. Equally so, there are folks who need not be in the industry, who are from the practice, who have a very strong understanding of finance function, who have helped companies in terms of managing their accounts, let's say, function, filed their taxes, have done their audit. They have a reasonable understanding of the business. They also tend to come to the practice arena of, let us say, virtual CFO. The shift is definitely a little more difficult for a practitioner than a person who is already having a tag of CFO. But nevertheless, honestly, as I was trying to tell you earlier in my conversation, we all are entrepreneurs. So entrepreneur ko pata chalta hai, in the sense he will know as to how you have to make the doors open for you. You have to make pictures. You have to actually have a perspective of what's the value add you actually have brought in to an existing company. Based on that, believe me, there will be folks who will be able to talk to you and provide you the opportunity of a virtual CFO. And to the question on the fees, it significantly varies. The fees at the higher end, it is typically rate card driven by an hour, driven by a day. Okay, it can range anywhere between 5,000 per day to even a lakh rupee per day, right? Whereas on a more fixed model, which is actually a nice thing to start with, you could ideally start with maybe a 10 or 20K per month and provide quality service, win over the earlier few of your clients who can actually reference you, who can actually tell good things about you, saying that you made a difference to their finance function, you made a difference to their business. I think then you can build on top of it. I hope it helped to answer the question.
Yes, sir. So I would request if you can unshare your screen and I can put that question for the members. And in the meanwhile, I'll ask you the next question. So
Also, I have sent a mail to Shreyas on the same subject. If he can go through his mail and answer it, that will also be nice. Are you on, Shreyas?
Yes, very much on. Just looking at my email.
Yeah. Priyanshu, you may have to tell people to
yes,
log in and all that
yes,
instruction.
sir.
You might have.
We had made it more simpler. I would request all the members to scan this QR code and they can very well give the answer yes or no.
Even better.
So I would request members to please scan this QR code so that we can have this question and we can work upon this training program. For the next there is a question from a member wherein he's saying that I am working with the NGO as a consultant. Can you give guide? Can you please guide what will be the broad CFO functions which I can implement? The trust uses Tally Prime and have multiple grants. We are really struggling to handle all these grants and functions.
I guess if it's a matter of technical question about Tally Prime, I think I'll let
Yeah, yes,
Shreyas
yes.
take the question. Yes, Shreyas.
No, I think what are multiple grants, and I'm working actually with a very similar company. It's an NGO, but it's a US-based NGO, and they have presence in multiple countries, and every country has multiple projects. So these guys are using SAP, but SAP is an overkill for most trusts, in my opinion, unless you have very complex manufacturing and all that. But what is being implemented now to ease their way of doing business is Zoho projects, for example. You can have every project listed separately. You can have vendor purchase orders issued against that project. Then you can have the vendors' invoices come into that project, and then again you invoice the end customer against that project. So you can have end-to-end monitoring of that project in one place, and multiple such projects can flow into your P&L. So you can try something like this, which is a very simple solution to. There might be other tools as well, but this is simple, not too expensive, and can be easily implemented and used. That's why I'm referring this as a technical solution to the problem.
All right, sir. So the next one is virtual CFO is not supported to have.
Priyanshu,
Yes,
if
sir.
he can answer my question, because Bangalore branch meeting is going on. I have
Yes,
told
yes, sir.
them
Sure. You
15
can take your question, sir.
No, I have sent it to him. So if Shreyas has seen it, he can give a broad answer to that.
So this is the broad training structure, or
Yeah. But it is AI, okay. No Madhukar head has not been used. I simply said a 10-year-old chartered accountant who wishes to learn to become a virtual CFO, what sort of a training program will be required. My question is, how long? We'll do it online, but how long can this program be there? Because I don't know how normally our chartered accountants may not be able to spend too much time. What is it they can do offline is something which we can tell them. This is what you need to do offline, which will take a few months. But the training inputs of it, maybe a 3-part program. Do a program for 5 days, 3 days, and then again give a gap, do all this on your own, come back, do this. Because this CFO is not what I understood from what you said. It is not so easy. It looks, see, virtual CFO, it looks easy, but it is not so easy, is what
right.
I understood.
No, I think it's very doable. The main thing I think Srikanth has spoken quite elaborately on it is to let people know what CFOs do and what is an expectation from a CFO for every business. If we can take them through that, what is the journey, how much percentage of theirs in which phase of the company, which size of the company will go to statutory audit, will go to compliance, will go to business acumen, which Srikanth elaborately touched upon. So I think that is what we need to, and that is anyway not fixed. It is dynamic by organization, by personality, by a lot of other factors. But we can generally take them through a course which talks about the expectations from a CFO that every organization has. And maybe we briefly also touch upon different industries like fintech or finance and banking, and what about real estate, a completely different set of understanding and completely different risks. So I think we have to just sort of try and do that. So one is a general structure of what is expected out of CFO, and then last is briefly touch upon how the industries might expect them to still be different, and also the scale of the industry. A startup will need completely different guidance versus a very well functioning finance structure where you're only giving strategic inputs.
See, we have got one real estate 6-day course, and we have got an extensive material also, 500, 600 pages. So if I were to say a CFO for real estate after this general program, first question is general program, how many days? 2 days, 5 days? What is that?
I think 2 to 3 days, because the general finance acumen is already there.
Yeah,
it's
I know.
Structuring it. What do you say, Srikanth?
No, well said. I guess we have a foundational advantage that It's not virtual CEO, right? It's virtual CFO. The word F is already which is finance. So we already naturally have the finance acumen available. It's more about fine tuning to what's the requirement on the other side. What does the industry need when they are actually asking you to come in as a consultant and help them, right? And what's the difference we are playing, A versus B? That is, you're already a chartered accountant, you're probably an auditor, you're filing your taxes and accounts being taken care of. So what more can you actually try and do there? It's probably that expectation setting which needs to be slightly fine-tuned, especially in the context of highly tech-enabled companies, right? You have tech for everything now. So from agri-tech to you have defense tech, right? Everything is covered now. So you have to probably bring in an element of finance and a larger business understanding and a tech enablement. All three together will probably will position you very well.
I think you're given a good idea. There used to be a 5-day course in 2020. Our committee only had done it on, a refresher course for virtual CFO. I have not seen the content, but it was done long back. So maybe we can look at it, So it's a good answer, and maybe next year we should certainly have the incomplete meeting of last year completed. I will have to leave because Bangalore branch meeting is on. I need to leave. Thanks a lot for both of you. And yeah, I thought that, if I look at it, business acumen, I am a value adder in my practice. I always believe unless value is added, nobody's bothered. They don't really value your service. So that business acumen part of it, maybe a couple of sessions on where all low hanging apples are there in various areas. Maybe that one half a day or 1 day session can really make them improve in their own practice also as a CFO, virtual CFO. Maybe. Anyway, we'll get together on this. Priyanshu, you should ensure this January. We need to
sir.
have a meet.
Sure,
See
sir.
you all then. Thanks a lot. Have a wonderful 2026. Let it be joyous and fulfilling. Anyway, all of you are rich. Shrikant and Shreyas. I am not talking about Priyanshu. Priyanshu prosperous also.
Thank you, sir.
Thank you. Bye.
Thank you.
So, as we conclude for today's webinar, on behalf of the Committee for Members in Practice, I extend sincere thanks to Madhukar sir, CA Shreyas Kumar sir, CA Shrikant Ravindranath ji, our eminent speakers, and all the participants for their enthusiastic presence and engagement. We trust that today's webinar has provided valuable clarity and inspiration to explore and scale virtual CFO services as a meaningful and impactful professional opportunity. Thank you once again.
Thank you.
Thank you. Yes.